Well, hello, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, January the 7th, 2023. I'm thinking ahead to summer. Anyway, great to see so many of you here, and welcome aboard. Do feel free to post a ticker or two or three if you'd like me to pull up a chart, either for day or swing trading. I'm going to assume that they're mostly for swing trades, but if it's a day trading chart, please type the ticker and write the word day or D or something so I can know what you're asking about. Anyways, let's take a look at the broad market. We had a really big rally yesterday. Just a reminder though, that's still a bear market rally. So we may get a little run here. Obviously we want to use 4,100 as the major resistance area. Momentum, we'd use 3,950. But again, the market may gap up, go as high as 2 or 3 days. The thing to look at next week, remember I said this, you've seen how good my calls have been. We want to see 3 days or more of continuous run to verify any kind of trend reversal. So if the market's still going up Thursday, okay, then we may start to put on some size in our long swing trades. But in the meantime, like I told members in the live room yesterday, it's a good time to sell into the buyers. Okay, you always want to sell into the buyers. See, you make money as a trader by buying high, selling higher, or buying low and selling high. You don't make money buying high and selling low. So, and frequently, as we've seen, every single freaking time the market's gone up in a bear market, it pulls back. It goes right back down again. So big rally day on Wall Street. Then the amateurs get suckered in and say, oh yeah, the market's going to run. And oops, darn. Johnny, tell them what they won. You've won an all-expense paid trip to Loserland if you buy high and sell low. So what you want to do is be skeptical. Like any good Wall Street trader, we're all skeptics, right? We're born skeptics, right? Because you've been burned a few 10,000 times. You learn the difference between what works and what doesn't. So I'm not going to start swing trading aggressively to the long side unless the market goes up for at least 3 days. So the 3-day rule, it's Wall Street, look it up, 3-day rule Wall Street. If we have at least 3 up days and it then continues, okay, then we may have something. But in the meantime, we'll probably have some choppiness and some unpredictability and a relatively still range-bound market. One thing to look at too is sectors. Okay, relative strength in sectors. Metals have been strong lately. Gold has been up lately, and you might also look at steel with US Steel X and Freeport FCX for copper. So metals have been one sector that's gone up. Cannabis has done a little bit of a bounce. We've got other tickers to look at as well. Oh, thanks, William. I appreciate it. So you guys, let me know tickers you'd like me to pull up. I'll pull those up starting in just a minute. But let me get through our market forecast here. XS, Mark, AEH. HR. Hey Rick, let's see what I'll be long Monday. Am I trading Soxel and Soxes? Not yet. We're going to see where they go. So here's our S&P. So my forecast is a little bit of a bounce, probably Monday or Tuesday. Then anything's possible, right? So keep an eye carefully on the market Wednesday. Middle of the week Wednesday is going to be a key support or resistance day. We may well get a continuation run to get people in on Monday, Tuesday, but Wednesday at the end of the day is going to be kind of like the tell for the immediate market direction. So as long as markets keep going up, pedal to the metal, we'll play it long. All right, the other thing to look at, of course, is our VIX, which has been down quite a bit, down what, almost 9% yesterday. It's been coming down off its earlier highs. It's been consolidating. The VIX is still struggling here between 19 and 25. So we had a bear cup, or I should say a bearish engulfing here, a bearish reversal pattern here, and it's mostly been red. So the VIX has been, it's went down, but it's gone sideways. As long as the VIX stays over 20, or actually over 19, or the market's not out of the woods yet. So if the VIX gets under 19, okay, and the S&P gets over that resistance area I mentioned, then we may have some long, a bull market recovery. But unless the VIX, ask any, Wall Street guy, ask any floor trader or prop trader, unless the VIX gets under 19, we still want to be cautious about going long in this market. Remember I said that. Unless the VIX gets under 19 and stays there, you want to be cautious about going long for swing trades. Of course, day trading, we love going long on green days like yesterday. We nailed it, but want to be cautious for swing trades. And if the market does get back over the 24, that's that shooting star here. If we get over the 24 highest shooting star, and especially if we get over the major resistance at 26, obviously the market will be going back down again. And our inverses like SQs and SOXS that have been doing so well will likely go up as well. All right, let's take a quick look here at some of these charts and we'll continue on. This is the kind of chart I like, and this came from one of you folks, so thank you. So many of you are so smart. It's a pleasure to work with you guys because collectively, because we have really intelligent traders around here. This is the place where smart people come to trade, okay? Or people who want to get smart and clever at trading, that you're in the right place. Now, before we look at some of these charts and why they're good and how to trade them, I just wanted to mention that I do have our New Year's super sale going on live through tomorrow, okay? Offer does end and will not be extended tomorrow at midnight. So you've got the weekend to think about it. You can get these 6 months for just $647. So it's just about $100 a month live room access with me. And in those, we meet via Zoom every single day from 8:30 till 11 o'clock. So we got plenty of coverage throughout the morning, long before, an hour before the market opens. I'm here bright and early, and I've been up since even an hour before that. I often start trading in the very first part of the pre-market trading hours. Anyway, I do have the live room special, and I would encourage you to give some serious thought to that. We also meet in the afternoon from 3:30 to 4, and on like 2 o'clock on any FOMC day, or anytime there's something exciting that might hit the markets. I'm here for you guys. So I do encourage you to join me. You've seen how well my alerts have worked out. We've had really big success with them lately, and so you may want to give that some thought. The Zoom live room is just $647 for 6 months, which is a total bargain. That's only $100 a month for 30 hours a month of, at least 30 hours a month of training. So hundreds of hours, and it's a good deal. So you'll get the best alerts each morning with specific entries identified before the bell, and live I'll tell you guys where to re-enter, how to trail a stop, where to exit, where the targets are, step-by-step active day and swing trading exclusively at my trademastery.com/New Year is the ticker, I'm sorry, the URL for that. So give that some thought, would you? All right, now let's take a look at the charts. We're going to start off with VIPS. Good example of a 45-degree angle runner that's we've been mentioning it here for weeks, and it ran all the way from 7 to 15, so it doubled. This illustrates a quick tip. When you're looking for a chart to swing trade, make sure the range is at least, say, 150%, if not 200%. It should double, right? You want charts that have doubled over the course of several months, because that's where the risk reward is best. We have some leverage. Now, you don't want things that have, like from 3 to 18 or, 10 to 60. That's a little too extreme. But neither do you want charts that only say 20 to 25 on 3 months, because you're just going to tie up capital in an instrument that doesn't move enough to make it profitable, enough to make it worthwhile. So sweet spot is a doubler on a 90-day. Well, thanks to the tickers. Let's see. Yeah, I will make some notes on. Oh, thanks, guys. And again, for all of you logging in, let me know stocks of your choice, of charts you'd like me to cover. Also, I have the coaching program available too. So many of you had applied for it. And for those of you who have applied but not yet paid or registered, I urge you to do that, because our coaching program is starting this month. And the active trader coaching, it's at trademastery.com/action. And you can read up all about the big coaching program we've had. So I've got both the 10K and the 25K programs. It's not for people who are maybe new to, if you don't know about me, I only encourage people who've benefited from working with me and have learned with me, as so many thousands of you have the last 20 odd years. But for those of you who are familiar with me, you may want to consider a lot more access with me, with personal calls on the phone or Zooms and trade reviews. I go over trades with you personally, individually, for what went right, how you could have made more, should you have traded that in the first place, and if not, why not? And so you got trade reviews with me as part of my coaching program. Okay, so that's two different offers. One is a coaching program, kind of high end. The other is the live room, which is only $647 for a whole 6 months. So that's a bargain. All of you should get the 6 month special for sure at the site. And let's see. So that's a great chart. That's the kind we like. I'm going to blaze through these right quick. I'll spend a little more time on the charts that you folks mentioned. TME looks great. And the reason I go through these is I want to familiarize you with the types of charts that you should be focused on as an active trader, at least the ones that I think have good trade potential because of their volatility lately, okay? And directional strength. For example, if you're comparing, like Freeport's good because it's taken out a new high and it's got a nice kind of 3-candle breakout, but it doesn't have the same kind of range or strength as, say, a VIPS chart. If your experience is like mine, often as an active trader, you struggle with deciding, where to put your money, because unless you're extremely wealthy, you can't afford to trade everything. So you want to narrow the list down to an actionable list of 5, 6, 7 stocks to swing trade, maybe up to a dozen. But I seldom will I do more than a dozen. I used to try trading really tiny, but a ton of stocks, and that's too much work. And in my early days, I'd only trade like 2 or 3 things, and that's not enough. So 5 to 7 is kind of a good range of instruments to swing trade. Okay, so that's another quick tip. Hey, thanks. All right, anyway, what else do we have? Let's take a look at some of these charts for you guys. This was from our last week, some of the earlier charts. I'm going to look at the ones that you guys mentioned here. Just a quick note, metals are strong. So this is a GDX, gold, and FCX, the copper play up high as well. Okay, now you folks had asked about these charts. VTRS, I like it. It's a good chart. It's not a doubler, but it's got a good 30% range. That's good enough. It's from 9 to 12. A quick tip too. One of the, again, in line with my 3-day rule, one of the things that you want to look for before considering a swing trade is see if you have 3 green candles in a row. That's much better than, say, just one or so. So if you have 3 or more green candles in a row, that tells you've got a good defined uptrend that may be a better play than other haphazard random, green, green, red, green, red, red, green. They're undecided. It's kind of like a doji thinking about acquiring shares on the collective part of Wall Street. So with my institutional clients and with the market makers and specialists who used to come to my live Vegas seminars, one of the things we're looking at is consistency. Now, one of the things that can help in building, wow, big turnout today. Happy New Year, everybody. Let's all make lots of money, okay? That's my goal. Lots of money. Cha-ching, flawless victory. The goal is to look for patterns that are consistent. Now, many of you, myself included, have always struggled with building consistency into our trades. And the thing that I found helps best is to be a rules-based trader. Have rules of engagement, like thou shalt buy 2-day high breakouts for swing trades. Thou shalt sell, or at least scale out of, a loss of the previous day's low incrementally, right? So always position, size, and scale. Only trade the strongest rock star charts and leave all the just okay maybe charts alone, because they usually don't work out. Even the best charts are tough to trade sometimes. So be very selective and trade consistent patterns that make sense. So for example, if you have at least 3 green candles at new highs, okay, price action going up, that's a good setup. So I like that kind of chart. So that's a good one. Whichever of you mentioned VTRS, that one's good. Let's see, this one's good too. The range isn't great, but it's moderately good enough. What I don't like, so there's 2 things I don't like about this chart. One is the recent trend had been down, and the other is the range is compressed, or not as much as I like. So it's okay, but I take a pass on this chart. I like the recent momentum, maybe good for a day trade, but I don't like this as much for swing trading. It's a good solid chart, so it's not a bad chart. It's not, it sucks chart. It's a good chart, but there's better charts out there. But yeah, it's moderately gets a nod of approval. The one thing I do like about this is my famous small candle, large candle pattern. You may have seen this covered in my Stocks and Commodities magazine articles and so forth, but one thing I like is this pattern where, and I always like to draw on the screen to annotate patterns for my traders in the live room, is in an uptrend, it's nice if you see a small range or medium range candle followed by a larger expansion range candle. That often leads to a big breakout to the upside. So it does have that going for it. It tells us we've got bulls are firmly in charge and they're bidding it up and buying it. So I would, if it didn't have that, I would definitely not trade it. It does have that, so with a bit of caution, I would give it a nod of approval because it is taking out new highs. All right. And how I trade those kind of patterns is I use that decision support to decide the share size, right? Stronger charts, it's like playing poker, deserve more of your attention. So the stronger the chart is, the more shares I will purchase. The more questionable, the least shares. Now, if it's just okay, I may still put on a placeholder trade with tiny shares, but not a lot. If it's a rock star chart with a great pattern, I go ahead and push the pedal to the metal. So you can, that's a neat thing. You can bet as much, and we shouldn't use the word bet, but that's what we're doing. We're not gambling, we're making informed trade decisions, but you vary your bet size based on the strength of the pattern. Now you can't do that in Hold'em. I used to play Hold'em tournaments all the time in Vegas. I won my first big tournament like 7 years ago. You can't, play heavy on the flop or something, because people will fold if they know that you play strong. So, but with trading you can. Now, what about Ford Motor Company? Overall, I like Ford, but I think there's much better charts to trade. This is coming off a low. It will probably grind its way up to 15, but there's two things wrong with this. One is it's already bounced off a support level, so you're kind of late to a bounce trade. The other is the range is compressed. That's a critical deal breaker, right? 11 to 14 is not enough range to trade, and it's the middle of a chart. So which would you rather trade, that chart or that chart, right? It's like an eye test. So Ford, I used to be a statistician for Ford. I love the company, love the management, they're good people, but you're fired. I would not trade Ford. AUPH, nah, too haphazard and scattered and random. That's a good example of a gambler's chart that one would not want to trade, because it's too random. It was up, then it's down, then it gapped up, then it, like dating women from nightclubs. They're very inconsistent, and usually it ends badly. So no. Yeah. Nugget's a good steady grinder. It's okay, it's not great. Worth a shot, but let's see, how does GDX compare? Yeah, it's the same chart. So now from a leverage standpoint, so if you're evaluating two different identical charts, often you see this in the ETF. Well, you always see this in ETFs that track the same instrument group. GDX, the range is 23 to 31, so it's an $8 range on a $30 instrument. And this is a 12. It's hard to tell, the percentages are about the same. Either one should be okay. I'd give the nudge to GDX though, because it's less expensive and you get the same chart. Okay, FDX, 150 to 184. This is a terrible chart. This is a horrible chart. It's trending up, but it would be very difficult to trade without getting stopped out. One of the first things that I teach traders, and I teach them a lot in the live room, is evaluating the likelihood of getting stopped out. I'd be really likely to get stopped out on that chart because it's inconsistently up. If you have an inconsistently up chart, you'll often get shaken out, right? I get shaken out all the time. I try and do my best to avoid that by picking charts that, instead of wide ranges, have really tight ranges. This thing has a wider range and it's all over the map going up. So for that reason, I wouldn't trade it. Does that make sense? There's all these lessons learned that my traders learn from me in the live room. And again, we've got limited time here together today. Give me your tickers too, guys. Let's see, what do we have? I'll cover as many as we have time for in today's brief session. Hecla. All right. So what we're doing now, for all of you just logging in, a lot of people here, is I'm going through charts of your choice, or tickers that folks have just mentioned here in chat, and they're scrolling by, so I'm trying to keep up with it. PHVS, I like it. It's an ascending triangle. It's done a mean reversion pullback. That's where it's gone up. It pulls back to half and runs back up again. That's what that is. 50% retracement, Fibonacci 50%, and then back up. Yeah, it's all right. I like the range, so it's got some excitement, but it's not a consistent up chart. So with reluctance, I would pass on that. GPR, that one's, it's okay, but the range isn't as good as I like. For $40 instrument, the range is only 30 to 40. It's okay, but I think there's better charts out there. That is still a decent chart though. It's okay. Give it like a B- or a C. So barely pass, maybe worth a look. Let's see, when Wind's steadying up. It's decent. The range again is just okay for $90 a share. I think there's better picks out there, so I wouldn't be buying that at 94 share. Now, EXAS, that's a terrible chart. This is a horrible chart. You get stopped out on this punt because look, every time it goes up, it goes right back down unexpectedly. Then it goes up, then it fakes out. Then it goes up, then it fakes out. Fake out charts like this are the death of your account. Just say no. You're fired. All right, Merck. It's a nice looking chart, but the range sucks. The range is no good. For a $90 chart, I would own at least $30 or $40 worth of range on that. This guy is only 90 to 115. So it's a wonderful chart. It's in an uptrend, but your capital allocation isn't. The numbers don't add up. If you're one of my institutional clients and they're asking, the floor guys are asking, what do you think about Merck and New Eyes, Calhoun? I say, well, yeah, you get something out of it, but you get more on a better leveraged instrument that has more range to it. Range is really critical that you get. As an active trader, the charts are helpful, but the range is more important. Did you guys know, ask any Wall Street trader, any floor trader, range is much more important than the pattern of the chart. That's something that comes to much surprise for a lot of traders who don't know how to trade, or people who are relatively new to trading, is on a stock chart, that is 10 times more important than the stuff over on the left that's being plotted. And it's because trading is all about math. And any floor trader is nodding their idea. Yeah, Calhoun, tell them. It's the truth. Math is more important than chart patterns. I mean, I'm an expert technical trader. I'm award-winning columnist in technical analysis of stocks and commodities magazine. Say that 5 times fast. I know my technicals. More important is the range within which the technicals exist. So it's a great looking up chart, but the range means the risk reward isn't as good. And my goal is to try and leverage my money to make as much more money as I can. So an expensive chart and a good trend with a narrow range is not as good as a cheaper chart with a good trend that has a much bigger range, because the profit potential is higher in the other chart. So for that reason, I would, despite the fact that it looks beautiful, and it's a great looking chart, I would take a pass on it. Because for $115 a share, I might get like $8 or $10 out of it. But I'd rather trade something at $20 a share that I could get $4 out of, right? Because it's like a 4-time ROI delta. So it's a good chart. That's the kind of thing that people just don't know, right? And so one of the advanced strategies that I like to teach traders in my live room is how to evaluate the trade worthiness of a chart based on not only the chart pattern, but the range of that chart, and also timing of the chart. Timing is critical. For example, the market usually reverses at 10 o'clock in the morning every single day. Go back over the last year of charts and see how many times did the S&P go the opposite direction at 10 o'clock, give or take a couple of minutes, like 9:55 to 10:05, usually right near 10. The market, if it had been going up, goes back down. If you get stopped out, that's probably why. You bought like right before 10, and then sure enough, the market went down and you got stopped out. Knowing those kind of things, you can develop a more intelligent, hopefully more profitable trading plan as the goal. So anyway, I do have my super sale for the live room, and it's just $647 for 6 months. I hope that you can make it. We'll get back to charts here momentarily. And a lot of people logging in now, so good to see you folks here. So do join the live room if you're not yet a member. I promise I do my very best for you to give you very good, intelligent, step-by-step, where to get in, where to set a stop, how to set the target, when to close out the trade, when to re-enter if it keeps going up, which they've been doing a lot lately, and how to manage your entries and exits. So something that may be of value to you as an active trader. I'm really honored to have so many hundreds of people in the room. And one of the things that I like to do is make sure that we have very well explained, very step-by-step entries and exits. I spend a lot more time on the reasons for the entries than just the entries themselves. I throw off entries like a squawk box, but I give you the reasons behind them. Like, hey, we're just over a whole number and it's early in the morning and volume is picking up. The tape looks strong. Let's go along. Let's see, AEHR sounds like Hound of the Baskervilles. That's an absolutely terrible chart. That's a horrible chart, at least for a swing trade. And look at it. I mean, just look at it. Really? Who would swing trade that when you could, I don't know, pick one at random here, when you could swing trade, I don't know, like say that instead, or this instead, right? So personally, I would not be trading AEHR. Even the dogs down the street don't like it. They're even barking. Oh, Who let the dogs out? Okay, next, Rio. Rio Tinto is a nice chart, but the range is dubious. The range is just barely, maybe okay. I'd take a pass. I'm not going to trade that chart. Now, if it had a range of say 30 to 70 or 40 to 70, like a 2-to-1 type range, it'd be good. But as I say, as a swing trader, how do you set your exit targets? How do you price project exit targets? Generally, you want to use 30% or so, about a third of the range of the underlying instrument over the 90 days. So a third of the range from 50 to 70, that's a 20-point delta, is only about $7, and that's only 10% ROI. So I don't want to be buying at 74 and selling at, say, 79 or 80. That's not enough money for me. It's not enough money in my pocket. Booyah! My job's not just entertain, but to teach and inform actually really how to trade and not how to say, buy things on value. And the range isn't sufficient here to justify the entry, or just barely. So there's better charts out there. I always think about it. It's like, there's always better fish in the sea. So when it comes to deploying my capital, especially for high price stuff, to me, anything over $20 or $30 a share is a bit pricey. My personal comfort zone is like $15 to $20, $30 a share, usually 10, 15, well, 15 to 25, 15 to 30, if I had to pick a range. $15 to $30 a share is the range that I cover the most and I like the most. Now in the live room, we often cover, like you can see, things that are down like Riot or blockchain at $4 a share, UVXY down at $6 a share. We do cover some of the cheaper instruments, but we generally like things between 15, 20, maybe up to $30 a share. And that's what I like to trade myself. So the point is, if it's, to me, expensive up at $70 a share, it better have a much bigger range to it. So for the math reason alone, I would disqualify Rio. How about this one, AGCO? Oh, that's terrible range. $140 a share, and it's only got $35, $40 worth of range. Nope, too expensive, not enough range. From 24 down to 12. No, I generally like buying things that go up, so no. GEHC. Really? You're fired. Boom. Echo, you're fired.
Oh, man.
That one's fired too. The oil holders, terrible chart. Hecla Mining. Not enough range. 4 to 6, that's not enough on a 90-day chart. So most of your guys' charts failed the range test. And it's not that the chart pattern underlying was terrible, it's that the money to be made is not enough. You see, as an active trader, I want to make money, as much money as I can make. And the goal is to do that with very consistent, strong charts that have wide ranges and patterns that I know how to trade. Like they have a saying here I live in Colorado, they have a saying here in the Wild West is, beware of the man that only carries one gun. It's because he probably knows how to use it. So you want to take a look. Now let's take a look at some day trading charts and then we'll wrap up. I want to thank you all for being here. I hope that I've made my point on the types of charts that make sense. Now here's an example of a chart with extreme range. It's rare to find something like this, but I called this one long for my members on Thursday at 18:20 for a day trade. This is for day trade calls, and I called it at 18:20. Now I gave traders, and this is the alerts table from that day, specific entry ahead of time before the opening bell, exactly where to get in. Okay, and so we've got really good charts. They're up, down, they're all over the place. Now, Plug did good yesterday in Beyond Meats. Tesla had a really monster run, right? Yesterday I called it, I think it was 103.6. This table's from Thursday. Let's see some runners from yesterday. Plug had a good day. PLUG, maybe worth keeping an eye on Monday. PLUG up it. By the way, the best pattern to help you filter, to help you simplify, to help you identify what is worth trading is simply a chart that for a swing trade ends at a 2-day high. It ends the day above the previous day's high in an uptrend. That's a really good chart. And of course, for day trades, we like minor gappers or charts that have a 2-day high pattern that's relatively strong. Let's see if I can give you some examples here. BYND, not Peloton, BYND had a pretty good, decent pattern to the upside. X was good. The Bitcoin plays too. You may want to keep an eye on your BTC, Bitcoin plays like Riot, Marathon, and Coinbase, COIN. There's that FCX chart, nice minor gap continuation. And here is Ford with a nice 2-day high breakout. One that we cover often too is NEO. It has good volatility. And they didn't take a bite out of Apple yesterday. It ran up as well. So when you have good relative strength, especially in some of the that's a high multiple large cap techs, like whether it's Apple or Tesla or Facebook or whatever, those are some of the charts you want to keep an eye on. Anyways, TQs was a monster yesterday, right? I also cover the leveraged ETFs. I'm an expert in trading them. I've traded them thousands of times. I did over 10.1 million worth of trades in UVXY last year, worth of order flow. I'm very experienced, and so we cover the leveraged 2 and 3x ETFs as well. And sometimes we trade those more, or at least I trade those more than stocks, because if you have a really good margin and say a good leveraged trading day, those provide bigger ranges than some of the underlying equities because they're leveraged. So we're covering TQs and others for our members yesterday as well. My two favorite instruments to play when the market goes up are SOXL and TQQs. Mainly SOXL. It's a leveraged semiconductor ETF. And when the market goes down, of course, I like things like UVXY and SQs, right? SQQs. So I cover those every single day very carefully. I cover very specific entries and re-entries and exit targets, all right, and where to get out. If it runs up and starts to go, I say, sell now. Like a Wall Street squawk. I am a Wall Street squawk. I'm a living Wall Street squawk box machine. So I like to give you guys dozens of alerts, very carefully, intelligently explained in a way that makes sense, and you can pick and choose from among them. Let's see. Oh yeah, some other charts. And my room is probably 80-90% day trading, 10% swings. I cover swings at the end of the day after 4 o'clock. If there's any new swings, and for the day trade calls, that's the main focus of my room is, again, I am the founder of Day Trading University from back in the 90s. I'm the original daytradinguniversity.com, and I still have the daytradinguniversity.com site up. But yeah, mostly day trading calls, and that's what we cover in the room. So it's like 90%, maybe 80% day trading, 20% swing. So something for everybody, but we're mostly day trades. Let's see any other tickers. I think that's about it. Let's see, Bale and QFN. Hey, Bale. Looks good on the day intraday chart. Let's see. Yeah, it's okay. Kind of sketchy though. It's not a bad chart. But again, one of the things that I think can really help you as an active trader is to intelligently honestly look at the chart and be very honest with yourself. Would you likely get shaken out of that chart had you traded it? And I would have, I would have bought the breakout high and then got shaken out, then bought the new high and then got shaken out. So not my style. Oh, thanks, Peter, saying thanks, great webinar. Well, thank you for being here. You guys are great for being here, especially on the New Year's weekend. So appreciate it. Let's see, what are the indicators that I like best? What are indicators? Price. I'm a pure price action trader. I don't use squiggly lines. We don't need no squiggly lines. The squiggly lines are for idiots. We need range, we need directional volatility, we need the math, we need price action, we need time and sales, the tape reading. I don't use indicators. I use price action. Oh, thanks, appreciate it. And let's see what else. QFin. Someone asking about that one. So I'd get stopped out on that one. QFin, that one I like. That one's good. That's good. It's got range. It's got consistency. Thanks. That's a good chart. So that one gets a pass. That one I give that an A or B. That's A or an A minus. That's a good chart because it's got, again, So remember that filter on a 90-day chart. It should have a 2x. It should have twice the range. So you look at the bottom number in the lower right down there is 10, and look up at the high number. That's the first thing I look at is in a chart. Is my eye instantly races to the right, and I look at the range. That's all that matters. Well, that's the main thing that qualifies a chart is the money that could be made in the chart. Okay. So you have my word. That's very valuable. It took me many years to learn that. So I hope that helps you in your trades. So give preference to charts that have a 2-to-1 ratio. Do not trade charts with less than 1.5, preferably twice the range. So 10 to 23 is great. That's over twice the range. If it was like 10 to 15, no. Okay. So the question, why don't I look at the VWAP? Well, the value-weighted average price is inconsistent in its ability to tell me exactly where to pull the trigger on a trade. I often get in way ahead of the VWAP and I sell into the VWAP. So what I find is the value-weighted average price is something that's inconsistent. It causes too many alpha and beta errors. Too many, you get in and it doesn't work out, or you don't get in and it does move. So carefully compare that's in statistics, we have alpha and beta errors. There's too high error ratio on both of those indicators using a VWAP for momentum-based day trade. So I use price action. I'm a price action trader. Specifically, I like going long right above whole number. So I'm the whole number guy. So if something's trading at say $12 a share, let's say it's at $11.70 a share, and so I'm waiting for it to get right over 12, maybe by 12.10 or so, and then I look to sell in the high point of the whole number, say at 12.80 or so. So I like to buy in the low region of a whole number and sell into the 80s or 90s. So I buy the 10s, 20s and sell the 80s, 90s. That's a very good strategy for active day traders. And so we like to do that. So, all right, well, thanks. You guys have been great. I hope that you will consider joining my live room. I hope that I've given you some actionable intel and some valuable tips. You guys have provided value by being here. So I appreciate your taking a little bit of time to share your Saturday with me. If you like what you've seen, and I hope you have, then I do urge you to join this. It's very cheap, compared to what I used to charge. It's only $647 for 6 months with me. And there's no scanners to buy. There's no software to buy. There's no extra charges, no upsells, no bullshit $2,000 courses to buy. None of that kind of crap. I bake it all into the live room. So so there is no ups, no extras, no hidden charges, no BS. I like to be the kind of trainer and trader that I'd like to learn from if our shoes were reversed. And I'm sure I can learn a lot from you and whatever you're an expert at. So I like to teach in a way that I like to learn, which is minimal cost and no hidden cost or BS or upsells, that kind of stuff. So yeah, Ken is a scanner. Yeah, right. Thanks, Bill. That's my eyes and brain they're still in decent shape. So I'm the visual scanner. And again, I use the Fidelity leaderboard scan. You can look at the percent gainers and all that kind of stuff. The trick is, like I do, is evaluating the trade worthiness of the charts. Say the big percent gainers, out of 10, there might only be 2 that are worth trading. And it's my expertise is to filter through the 10 and pick the 2, and also tell you exactly where to get in and where to get out. That's what people pay for. So and happily. So thank you for being here, and thanks for the kind words. You guys are the best. So have a great weekend. Be safe. Let's have a happy new year ahead. And one thing I will leave with you, a parting thought, a very good performance improvement framework is more of, less of. So I urge you to give some thought this weekend, not just only in your trading, but in your professional life and personal life. Instead of New Year's resolutions, which is a stupid cliche and I don't like that, specifically, behaviorally, trading-wise especially, what are you going to do more of? What are you going to do less of? And let's make it happen for you. So do join me. The link to sign up is trademastery.com/New Year. You have my word. This is worthwhile. I genuinely have my word. I work my ass off for you guys, and I'm deeply grateful to y'all for being here because, it's because of you I can do what I love doing, which is trading, and get paid for it because I know how to do it and teach the lessons learned between what I find works and what doesn't with live examples. So take care. I'm going to take off and spend some time with family. So see you guys later. More of, less of. Think about it. And in personal life too, it helps. Hint, don't go ask your spouse what to do more of or less of. Blah, 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 blah. Don't open the door. Just think to yourself. Keep it to yourself. What do you think more of or less of, right? The late great copywriter Gary Halbert said, "You know what your spouse's hot buttons are? Don't push them, and things will get better. Happy life, happy wife." Anyways, same thing in trading. You probably know how to get stopped out. I know I sure do. And you know which setups usually don't work. Do less of those. Learn to replace those. Have a replacement strategy. Replace what you've been doing with a little more careful, conservative, rules-based strategy. And that's what I teach with dozens of live examples 5 days a week in the live room. So you got my word, it's worthwhile. And even if you don't join, I still wish you the best in your trades. I want us all to make money and do better in our lives for ourselves and our families and our communities than else. So wish you guys the very best for a very successful new year. And I will see you in the live room, hopefully coming up this Monday. Take care, and I will see you guys then. Bye for now. And I will